Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. We love talking about stocks in the stock market here, but over the years, we've got more and more interested in the property market, the great Australian obsession.
We have. In fact, I went out for dinner with some friends from way back, and they have listened to the show of the journey and told me that we actually used to hate property.
No, we didn't. No,
they were like,
didn't.
I'm surprised with your change in...
No,
they were like, you were
news.
so anti-property. When I told them I bought a house, they were like, what the hell?
Prove it. No, we didn't hate it. We were just jealous we couldn't access it.
Yeah, that's true.
But look, when we want to learn about the property market, when we want to hear what's going on, there's one man we turn to. That's the founder of Australian Property Scout, Sam Gordon. Sam, welcome back to Equity Mates.
Boys, great to be back. Thanks for having me.
Now, Sam, we want to clarify it's not true. We never hated property. Okay, all right? Don't judge us.
I was almost about to walk out then, but I'll hang around, boys. I'll hang around.
But look, we caught up with you a week ago, and
Yes.
you gave us a sort of update on what's happening in house prices around Australia, different regions, different capital cities. Today, we wanted to, I guess, take a bit of a forward-looking approach. We wanted to say, you know, there's a lot happening. The elections just happened. It was a house price election. There's a lot of chat around interest rates.
Yep.
So let's talk about what is happening and then where that might lead.
Yeah, for sure. So sorry, mate.
Well, no. Yeah, I was going to tee you up with a question, but
No,
you
go. Tease up. Let's go.
I got one for you. First reaction,
Okay.
one word, election result, good or bad for property?
Depends on which side of the fence you sit. If you're a property owner, definitely good. It was a really interesting election because normally one side of the government or the other will be very pro something and the other will be very against it. But what we saw was both Labor and Liberals like literally going head to head, competing with almost like policies around property to make it more affordable and to bring these incentives and these grants and everything in, where normally it's like, oh, how can we cut this or cut that or whatever. So it was more, this is the thing, is more around, in reality, stimulating the market, even though they think they're going to be helping people. And I think they will be at the start. But there's a simple flow-on effect. When you stimulate or you make it easier for people to be able to access property, there is going to be a flow-on effect to pricing. We even spoke about it last week when we were talking in the segment around the fact of the bottom end of the market has gone through such a push. If you incentivize first home buyers to get into the market, which segment of the market gets the biggest push? It's the bottom end of the market, which continues to put heat on the rest of it. So I think it's going to be a really interesting thing. And in reality, man, it really almost didn't matter from a property perspective which government got in, because they were both being super aggressive with housing stimulation.
Yeah, I mean, like the simple equation is if you give people more money to spend on property, they'll spend more money on property.
100%.
Yeah.
If you guarantee them deposits getting in as well, and then all the grants that go alongside of it.
So not from a political point of view or like who you wanted to win or anything like that, but just when you looked at the set of housing policies, did you think one would push the market up more than the other?
In reality, man, they both had sort of pros and cons that would have the same sort of push. That's like I said, man, I almost was like on the fence. Didn't really, I'm very much in one party over the other. In reality, man, it didn't matter who got in because the policies were just so strong around housing. And again, I would just reiterate the fact, like government intervention in property only ever stimulates the market. Even when they talk about negative gearing, for all those years they spoke about negative gearing. You cut negative gearing, we're going to see a rental boom. You know what I mean? They cut CGT, you're going to see these things change and affect the market. They're way too long held, even cuts, right? Like they've been around for way too long. But when you bring in actually stimulus to help more and more people get into the market, it's only going to have one impact on it. It's literally that, a stimulus, you know, to push a market further on.
Well, let's start with looking at the policies specifically. So obviously Albanese government has won the election. And
Yes.
the two main policies there were allowing first home buyers to borrow with a 5% deposit.
Yes.
And then also they were going to pledge $10 billion to build 100,000 new homes for first home buyers.
Yes.
So one, I guess, is the supply side. One is the demand side.
Yeah.
For us, when we were speaking to the housing minister, it was like a sequencing thing because obviously the 5% is going to come in straight away.
Yes.
Whereas building 100,000 new homes, how
be
long is that
delayed.
going to take?
100%.
Well, especially because they're already behind on their 1.2 million new homes.
By about 100,000 a year.
Yeah,
So
yeah,
let's see where they
And
pull
also,
that from.
where are they going to be built? I think they were a bit aloof on that.
No, aloof is probably not the right word. Maybe vague.
Vague?
Yeah.
This is the thing as well. I almost feel like that one was a bit of a throwaway of like, well, this is what we're going to bring to it, but like, where's the actual logic, or where's it actually going to be happening? And I think that's such a interesting thing to unpack, which we don't even know yet. So it's hard to unpack because, like, well, where's the land that they're going to develop? In which cities? How are they going to allocate it? How's it going to be priced? Is it going to be priced at market value, or like how is it going to be brought to the markets? There's so many unknowns there that it really just felt like it was we're going to bring 100,000 homes that are only going to be available to first home buyers. It's like, yeah, mad. Where are they? Like, and what's the premise around it as well?
And like, you can't fault the intention. Like, the intention is good, but it's like policy execution is hard.
Yes.
And like, housing policy is particularly hard.
Yes, for sure.
Yeah.
Because there's so many fundamentals around it, right? It's like, okay, 100,000 homes. You're already 100,000 a year behind targets. How are you going to deliver on it? We're also in the middle of this huge infrastructure boom across the whole country. We've been in a massive trade shortage for however long.
If Victoria could stop building infrastructure, we might be able to build more houses.
But man, I mean, it started in Sydney as well, right? With all the tunnels, man. The tunnels
true,
and all the freeway upgrades and everything, man. You go to the Gold Coast, you go to Brisbane, they're always upgrading, building everything everywhere.
Yeah,
It's like,
especially with the Olympics
Olympics
coming
are about
up.
to-
man, 100%, dude. Like all the things, like the huge Golden Triangle train line they're going to be building, the bullet trains between all of it, man. And then again, you look at the tunnels, the Westgate Tunnel down there, $10 billion projects. Like, how many trades are being pulled from housing construction to go on these massive wages to work on infrastructure projects as well? It's like, how many trades are being pulled off the actual ability to bring more housing to the country as well? So, man, there's so many things there that are just like, that's why I kind of feel like it's a bit of a throwaway how they're going to deliver on it, because they were so far behind that $1.2 billion target already as well.
Let's talk about like the long-term, I guess, impacts, well, even the short-term impacts, but I guess particularly with your investor hat on, these government policies are coming. We're getting more supply into the market at some point, or the intention is to do that. How does the Albanese re-election, like, does it affect your thinking at all in terms of how you're buying, where you're buying, the pace at which you're buying, or is it just sort of the train keeps riding down the track?
Man, it's almost always business as usual. Because it's very rare that a policy can actually come in that can significantly impact the greater Australian housing market. The only one that's probably been brought in, which both of them sort of backed it again, that will lessen a slight amount of pressure, is the 2-year ban on foreign investment. That's the only thing that will probably actually genuinely reduce a tiny bit. But I think it's like 5,500 homes a year or something that they buy, which across the whole country is not much.
Yeah.
And also the types of homes that they were buying. Like, do you have a view, or do you have data on foreign investors and like where they were sitting in the market?
Yeah, so a mix of it between, I know a lot of the Asian demographic, they buy a lot of like new products. So new products sort of coming to market. There was a big thing like a few years ago around, they had all this vacant property. And then this is where so many of the governments have been talking about taxing vacant property as well, and double taxing and land banking and things like that. But again, 5,500 homes a year, it's a drop in the ocean compared to what is actually out there. I think, again, like I said, it would be a tiny tweak in the market, but I think compared to everything else that they're bringing in, it's going to massively override that. So I think in all reality, what needs to be understood with property is always one thing. Market fundamentals never change. So what drives a market? Simply supply and demand, and what's going to increase, decrease that. If that isn't greatly affected, then the market and where everything stacks up for a market to run will not change. If anything, when this stuff comes in, well, all of a sudden now we potentially have another 5, 10, 20% of the market. I mean, first home buyers typically make up a solid 15, 20, can be in occasion, especially with stimulus coming in, can be up to 30% of a market share in terms of buying as well. So if we start to throw that fuel on the fire as well, I think it's only going to prolong booms in certain areas and potentially kick off booms in other areas as well, and kind of create that additional stimulus. So for us, it's business as usual. Like, it's almost like if you're sitting on the sidelines looking forward, you're like, okay, sweet, we've got all this stimulus picking up. Migration is still at almost record highs, which has been swept under the rug. No one's really talking about it. And then we're also in the impending interest rate cycle cut as well. It's like, well, the writing's on the wall for another run. And even to touch on that for a second around the migration numbers, like the immigration numbers. I don't know if you boys are aware, but so last year in January to February, it was our highest on record ever period for immigration, right? And we're doing 700,000-800,000 a year. It was 161,000 new long-term migrant residences moved into Australia. 161,000. highest on record, right?
Wow.
This year, you know how they're all talking about it being wound back? 155,000 in the same period. So we're 6,000, 3,000 a month different to the record month ever. So immigration is still at a massively high level. And the pressure that we're already seeing that actually put on the market, again, I'm not hearing anyone else talking about this, but the pressure that that's going to put on the market, initially to be on the rental market. So the rental boom sort of tapered off when they eased off the numbers in the back end of last year. We're already seeing it tightening back up again with this new, sort of inbound hit of immigration that's in play as well. So again, writing on the wall, like it's business as usual. Like if you can buy. If you've got the ability to access equity, get out there, get into the marketplace. Again, it's business as usual. Keep building the portfolio. Stuff like this only ever continues to drive the market. When stuff like this actually gets pulled out, that's when there can be a bit of a peter off because, again, that little bit of demand gets pulled out of the market. They're talking about creating this huge amount of additional, investment that's out there as well. And the other key thing to take into equation, right? If they're looking to build 100,000 new homes that are only available to first home buyers, how many trades is that going to take away from the $1.2 million target $1.2 housing target that they've already got in place? If they're going to pull off if that's going to take a lot of people away from being able to hit that target, again, you're going to create a shortage of housing in the greater market that the average people who maybe already own a home or have bought before can't access. They're now going to be going into this, and we all know that with government projects, again, you look at all the infrastructure booms, the reason people go and get on all those projects is because the pays are ridiculous. It'll be the same thing. Like, how are they going to regulate and sort of keep that on point of it actually being affordable housing? And, again, $10 billion over that. Like, I don't know. To me, it's just writing on the wall that we're walking into another serious boom.
All I'm hearing is...
Seriously, man. Seriously.
Yeah. Find home builders.
Yeah.
Invest in home builders. Well, their margins are sometimes squeezed on what the market's willing to pay, but God, it's
going to be interesting,
a lot of work.
It's going to be interesting.
All of these 100,000 homes that they're going to build are just going to be incredibly... The government's going to take a loss on them.
They can't be doing it from a profit side of things. They're going to be doing it for a loss or break even. And it's just, I don't know, man. It seems to be... It's with the right intentions, but how well thought out actually is it, on an actually delivery piece as well. But again, you take trades away from the market, immigration is still super high, you plug all these policies in that increase demand and stimulus, like market's heading in one direction. One other thing I'd throw on that is it is always market dependent. So you've got to assess like affordability ratios. We've spoken about this so many times. There'll be different areas that won't be anywhere near as heavily impacted by these policies. But if that metric's there where it's heavily in the favor of it being able to move forward, I strongly believe we're going to move into another serious rate of growth.
Now, Sam, let's move from the policy side to the first home buyer side. Okay. And you're a long way from being a first home buyer, but you
nearly 16 years, man. Nearly 16 years.
But you certainly work with a lot of first home buyers.
Yes.
And so, in particular, you work with a lot of first home buyers who live in major capital cities but can't afford capital cities.
Yes.
And so you help them buy in areas that are cheaper and that are perhaps poised for better growth.
Yes.
So how would you counsel a first home buyer who's now got the option to do a 5% deposit or, potentially could look somewhere else and rent vest and, put 20% down or whatever? Like, how should people be weighing up the different options there?
Man, it's a great point to make, and I actually think it's the only time that I ever would have probably taken this into equation. And the other thing to remember is we've probably only got a small window before markets get properly stimulated by this, and it probably doesn't make sense again. I think there is a short window where it could potentially make sense, especially if you've only got a 5% deposit and you can't service anything more. And if that can get you into the market now, it might be a decent play for you. But you've just got to remember what market you're potentially in and how expensive is it, how much value actually is there, and what's your overall goal. Because if your overall goal is actually to invest and to build a portfolio, you can buy a property with a 12% deposit, right? So an 88% lend, as opposed to the 5% deposit and the 95% lend. There's not that huge a discrepancy. All right, it's double or slightly over double, but it's what are you actually trying to get out of it from an investment perspective? Are you trying to build a portfolio, or do you just want to get into your own home? And if the answer is you just want to get into your own home, this new scheme for now might actually be the best thing for you to get you into a market that you potentially have been wanting to buy into. Kind of weigh that up if it is suitable for you. But if the idea is to build wealth and actually to be able to scale a portfolio, it's probably not the right play. It's very unlikely that where you want to live or where this opportunity might be for you that still makes sense, commutable distance to work or the rest of it, it's also potentially quite unlikely that actually makes sense to be able to do that in that area and still be able to sort of build the portfolio going forward. So again, it always comes down like holistically, what are you trying to achieve overall? And if it's build a portfolio, I would still be steering clear of this as a strategy, and I would focus on getting that first deposit together and then building, scaling a portfolio in the correct growth locations.
Yeah.
Well, let's move to rate cuts because that's the other side of the equation. We've got the government policies, but we're also, well, as Westpac said, they've locked one in.
I think NAB came out and said they reckon it'll be a double rate cut as well.
50 basis points.
It might not have been NAB. One of the big four banks.
they
said
did.
that,
So what are the...
If government policy is train on the trucks, business as usual,
know.
this is like pedal to the metal, take a break off.
What are the analysts at Australian Property Scout expecting to happen?
Man, I think it's an interesting thing because if they do a 0.5%, like, you know, with everything we've even been speaking about and so many of the markets that are still in growth or starting their trend now,
0.5% would be wild.
it's huge, man.
Yeah,
It's huge, and
wild.
we're talking like a 0.75% cut. You know, in a
in
what a
total.
2-3 month
Yeah,
window.
yeah.
So like that combination, we're almost at 1% if we do that. Like we're literally 25 basis points off that. That's a massive difference. So it's going to be crazy to see if it happens. I got it wrong in I think it was in Feb when they did the first cut. I got it wrong because I was just like, knowing the property market side of things, I'm like, surely they don't actually want to stimulate this thing to kick it to another level. And then they did it. And then I look at it now and them talking about 0.5%. And it's just like, knowing what will happen in the property market,
Yeah.
I'm just like, surely not. Because it's just like, man, I'm already seeing what's happening on the ground now and the growth that's still going on. I'm just like, it will just put another burner under the marketplace as well. So as a property investor with a large portfolio, it's only going to be a good thing for me. But from a business perspective, I don't mind kind of growth not being stratospheric all the time, and kind of having that good sort of continued growth side of things as well. So
How are you seeing buyers currently reacting at the moment? Do you find that as we approach a potential rate cut, buyers hold back because then it'll help their servicing, or they're getting in because they want to get in before, you know, maybe that next leg of growth?
It always depends. If they've got the servicing to get in now, that is get in, because they know that the rate cut will result in a moving market, or a faster moving market. If people don't have the ability to buy now, they may be waiting for that to actually have that boost, that extra serviceability hit as well. It always depends on the individual. The cool thing about the clients at Australian Property Scout, they're almost always just wanting to get into the market. They understand that like time is not on our side, and if we've got the ability to get into the marketplace, you get into the marketplace. And if we get a rate cut, if you still have the ability to service and we get a rate cut, we've now got the ability to pull a little bit more equity out and then roll into another deal and all the rest of this sort of stuff. So yeah, man, for us, it's, again, we go back through any of it, it's business as usual. But I honestly believe if we see these cuts come in, the other that we're going to see a really good run. And the other thing I'll throw in is, in the last segment that we spoke about last week, we were talking about, like I threw that little teaser at the end around buyer fatigue, right?
Yeah.
Now, let me explain what we've seen happen in a lot of markets. Perth is probably the prime example. I'll throw Perth as the prime example. Perth's coming off the boil now. So it's still growing, still in growth, but it's slowed. What we saw from a buyer fatigue perspective was actually the owner-occupiers, first home buyers, owner-occupiers, getting out there, going to open homes, going through all these homes, and then being outbid by Sydney buyers, Melbourne buyers, Brisbane buyers. And this buyer fatigue came in where they just couldn't secure anything without paying stupid money. And so they walked away. And I think a huge part of what's actually slowed the market so much is they've walked away at the same time that investors have gone, well, the market's seen a huge amount of growth. Yeah. We've seen a portion of the market walk away. Maybe it's time to stop buying, and they've changed their outlook, and a lot of them have started buying elsewhere. We personally pulled out of Perth over a year ago, around about a year ago. We sort of started tapering off, and it was in a huge cycle at that time. Now, what I honestly believe is going to happen, if rate cuts do what they're talking about doing, the first home buyers and the owner occupiers will slowly start to filter back in, going, well, prices have actually petered off a little bit in some areas, or they've stagnated completely. And now all of a sudden agents are calling me rather than us chasing them and not even being able to get them on the phone. Now they're calling us because we're in their database to try and sell this house. And it'll only take a few months and all these rate cuts to come through for them to realize, well, it's more affordable. I can now buy with significantly less competition, and it's more affordable to actually own that house. At the same time that migration's coming in, pushing up rents. So what I think is going to play out, and it's not only Perth, but I'm using Perth as the example because I seriously think it will play out there if rates do what they're going to play. What's going to happen is, I think what's going to happen is then he's going to move into a secondary rate of growth and a secondary phase of growth where the owner-occupiers start competing against each other again. They wanted to get into the market. They weren't able to get into the market. The rents are still super high. They're actually moving into another little bit of a phase of growth again now. And they're just going to realize that they've got that ability to move back in. The buyer fatigue will wear off. The confidence will come back in. And then all of a sudden, that buying process will start again. And I think the more that interest rates get cut and start to come back down, you'll also get investors. And this is a little bit of a thing to be a bit wary of people listening to this and thinking of it from an investment perspective as well. Just be a little bit wary. It could be a decent time if you haven't bought there and it's like, you believe there is a room for growth and you want a property in Perth. Potentially it's an okay time to pick something up if you get something at a discount when there's been a bit of an exit and there's a bit of a lull in the market right now. But it is something to be aware of, that there is always only a level of affordability left in the tank. But I do believe we're about to move into a second phase of growth in markets like that because we're going to see this transition of people coming back into the marketplace, confidence coming back in, and we're going to start to see stocks sort of start to slide back down. The big caveat is always going to be what happens with interest rates. But if interest rates, if they do a 0.5% cut, and then they do another cut or two by the end of the year, and the next year moves into it again, it will only put more demand back in the market and move more owner-occupiers back in.
Well, Sam, can I get your property investor side very excited and potentially all hopeful first home buyers listening? Maybe despairing a little bit, because I wanted to fact check myself. I wanted to just double check, was it NAB that made the 50% rate cut call? It wasn't just that. So interest rates, the cash rate's now 4.1%.
Yep.
NAB have predicted 50 basis points in May and then 25 basis points in July, in August, in November and February. What? So by February that next year, they think the cash rate will be 2.6%. I reckon it will be 1.5 down. Like, that's stupid.
And we're already 25 down as it is now.
Yeah.
Are you including that or no?
No, that's not including what's already happened.
So almost
we went
2% down.
4.35 to 4.1.
So almost 2% down on what it was.
It just I understand that there's concern about the economy and the RBA.
That bad, surely.
Yeah. But it's like we only just got inflation under control.
Yeah.
House prices are ripping and consumer demand's held up okay. The idea that we need to cut so aggressively is
record low
surprising.
That's why I'm very conservative on that, knowing what will happen to the housing market and how it will run again if they do that. It will be crazy because what you got to remember is affordability ratios are also based off interest rates, right? It comes massively into it. So if all of a sudden we stick another huge amount of servicing in the tank with all these guys and girls, and especially with the new grants around the bottom end of the market, guaranteeing that extra 15%, like how many people who were sitting on the sidelines and got priced out, now this comes in and interest rates drop, go, hang on, I can afford to buy again, and the agents are all calling me again. I'll get back in. Yeah. This is where I can see this secondary boom coming in, and we saw it in Brisbane back in 2023 when the Palaszczuk government brought in for 91 days the land taxing, where they grouped if you owned property in anywhere else in the country, it's state-wise, they grouped it with Queensland. And so this change that was going to come in, it was going to decimate investors. And so from land tax, because let's say you own $2 million worth of land value property in Sydney and you owned one property in Queensland, they were going to amalgamate it all together and tax you on the whole thing. Like it was ludicrous. And I remember coming out saying there's no way they'll keep this in because the vacancy rate will drop to zero because all the investors they'll sell out, because if they group everywhere else, anywhere with multiple properties, it won't make sense to hold it. They did backflip on it, but it's funny. It took that 91 days it was in there, killed the market for about 12 months. And everyone sort of exited. And then what we found was the owner-occupier boom then sort of kicked off again about 6 to 12 months after that got culled. So it's going to be really interesting to watch this secondary boom sort of come in. I tell you right now, man, if NAB's right and they cut like that, game on. Like it's going to be big. It's going to be big.
So for people who are thinking about
feeling fucked,
thinking about the idea of property investing, or might be owner occupiers, or just but there's a lot of interest in this space. If there is the rate cuts and a secondary boom, that's has potential to be broad based, because everyone gets the rate cut across Australia. How would you think about navigating particular pockets of Australia, or where would you be looking, houses, townhouses, apartments?
Yeah.
For something that's broad based, where would you be watching the effects, I guess?
Broad based, man, it just always comes back to the fundamentals. So where would stack whether the interest rates were at 4.35%, 4.1%, 0%, 2.5%? Where makes the most sense? Because that is where we'll see the most growth. Yeah. So even Sydney at 1.7 million, if interest rates get cut down to if we go down by 1.75 basis points, it will still grow because the serviceability will come back in. The supply is still reasonably tight. It will still see growth. But will you see $100,000 growth in a $1.7 million market? Or could you get into a $500,000, $700,000 market that sees $300,000 worth of growth because of how affordable it is and how much stimulus that'll put into the marketplace? And that's where I think the real key will be. It's understanding where really does have a lot of affordability in the tank and the drivers that are going to push the market regardless. And this is why I say it's always business as usual. And the strategy doesn't change, man. You know what I mean?
And as always, we ask you, where are those locations? And you always say...
In Australia.
You always say, contact Australian Property Scout.
I was going to say, if you can show us a $500,000 house in Sydney, I'll be listening.
Maybe not in Sydney. But there's opportunities, boys. Like there's a lot of things that we've been opening up and really studying within the market, and we've seen. I've learned to trust my gut. I didn't used to trust my gut as much as I do now. But I don't know, man. I don't want to sound arrogant in this explanation, but I always seem to get it right. I study it really, really hard, and then I go get on the ground. And when I get on the ground and I get an understanding and I get a gut feel, yes or no. And every time I've backed myself and said yes, it's always happened. So man, I'm super bullish on what's about to play out of the next 12, 24 months. I believe there's one market in particular in Australia that will do.
This is a cliffhanger.
The giant tease.
Yeah.
40% plus growth this year.
Whoa!
Okay.
And if you want to know it, you're going to have to become a client.
Put it on the record. Come on, put it on the record.
He's not going to say it.
I'm not going to say what it is.
You would already be set there.
Man,
come on.
I'll tell you what. I said in 2024 that areas in Perth will do 30 to 40% worth of growth, and they did, man. There's areas where we brought in clients 23 and 2024 that did that and exceeded.
Think
that.
about the headlines you'll capture if you give us the AFR will pick it up. That'll bring clients.
I'll tell you what. The headlines we pick up when I'll give you boys a couple of deals in January next year to see the complete run of 12 months and the growth rates that we saw this year. I'll do that for you, man. I'll break down some case studies so I can show you what my gut feel translates into.
Okay.
And man, again, I don't want anyone to think I say this arrogantly. I've been doing this for 16 years, and I eat, live, and breathe this stuff. And I get such a buzz out of finding a market that I really believe is going to grow. And like I said, I've just gotten to the point where I trust my gut so much when I have that feeling, and it's always paid off. So yeah, I'm super excited about what's playing out this year into next year.
Well, I know a number of our community work with you as well, Sam. Feel the Love events we've done recently, we've met some of them in person who have been working with you, and they couldn't stop talking about the results as well.
Awesome.
So
that's great to hear.
Yeah, it's great. If you would like to get in touch,
some goosebumps, literally.
If you'd like more of Sam and his team, check out the Scouting Australia podcast, where you do a lot of case studies with your clients. So check that out. But also, Sam has the Top 1% podcast that's just been launched, where you sit down with high achievers to understand, I guess, what drives them and how they have got to where they are. But Sam, as always, thank you so much for joining us.
Thanks, boys. Absolute pleasure.
Thanks, Sam.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.